How is it going, market people? This is your host, Max Pitts. You're back with trades and gains, and buckle up, traders. This week is stacked, and I mean stacked like the Miami Heat back in the LeBron era with market moving events that could shake things up. We've got Nvidia earnings, we've got the Fed's preferred inflation gauge, and a GDP update that could impact rate cut expectations. Plus, corporate America is stepping up with big name earnings from Home Depot, Salesforce, and Lowe's. A lot more as well. But let's go ahead and break this thing down. So after record highs, stocks, much like the father who went to go out and get milk or cigarettes, stumbled and just disappeared, erased most of their gains. The S&P 500 was down 1.7%, and it pulled back after hitting an all-time high on Wednesday. The Nasdaq is down 2%, and this was weighed down by tech weakness, and the Dow is down 3%, which got hit the hardest thanks to Walmart's weak guidance and inflation concerns. Now, what is causing all of these jitters exactly? One, we have sticky inflation. Investors are worried the Fed might delay rate cuts. I mean, at this point, they are going to delay rate cuts. We may not even get one this year, so who knows? Trump's policy shakeups is number two. Tariffs, Pentagon budget cuts, and geopolitical tensions are fueling a lot of uncertainty in the markets today. And finally, the earnings reaction. Walmart's guidance spooked the living hell out of retail, and big banks got dragged down. Now, let's talk about what's ahead and where the big money is looking. So, some key market events this week. Again, we have Nvidia earnings on Wednesday, the big one. Why does this matter exactly? They are the AI king. They are the Northern Star. They are the LeBron James of this world. And its earnings report will be the event of the week. AI stocks have been cooling off, but can Nvidia report a smashing report and bring the heat? Our expected EPS is 84 cents, which is a 63% gain year over year. And our revenue estimate is 38.26 billion, and that is a 73% increase year over year. Now, some things to watch for this earnings. AI chip demand. Will Nvidia maintain its dominance, or will competition from DeepSeek AI in China start making a dent in that market? New product type. Nvidia's upcoming GB300 and Rubin products could fuel growth and optimism within investors. And we have the tech sentiment. Most of the Magnificent Seven has lagged this year. If Nvidia disappoints, tech could even sink further, so watch out for that as well. Now, the Fed's inflation gauge, we have PCE on Friday, and this is the big test for the Fed's next move. Our expected core PCE year over year is 2.6% versus the 2.7% in December, and our expected month over month growth is 0.3%. What it means: if inflation cools down, rate cuts in June could still be on the table. If it's hotter than expected, though, expect market volatility as traders price in a later rate cut or even no cuts this year. Remember how I said that in the beginning of the video? No cuts? Yeah, I said that, and no, I did not read this script. So, thanks. Anyways, does this mean for the market? We already talked about that. Now, GDP data, we have that on Thursday. Our second revision for Q4 GDP. This will tell us if economic growth is stronger or weaker than initially reported. Expected growth is 2.3%, which is same as the previous estimate. And personal consumption data, the key indicator for consumer spending strength, which, if you remember, Michigan consumer sentiment dropped 7 points, which was one of the biggest drops that we've seen since May, I believe, of 2024. And now, why does this matter exactly? A strong GDP print, the Fed may hold rates higher for longer. And a weaker GDP print could fuel for rate cut bets. Now, other earnings to watch we have here, we have Home Depot and Lowe's, and then we have a housing market health check Tuesday and Wednesday. Home improvement stocks have struggled due to high mortgage rates. Any signs of strong consumer spending could shift the sentiment here. Now, with Salesforce, they report on Wednesday, and will companies keep spending on AI and cloud software? Or is IT enterprise spending slowing down? And then we finally have consumer confidence and housing data on Tuesday. consumer confidence expected to drop to 103.5 from 104.1. Will shoppers start tightening their wallets? Most likely, yes, because again, inflation is ridiculous. I just bought like minimal groceries and paid $35. So pretty crazy because normally it would be like 15. Now, what are the key takeaways? Bullish signs here. If Nvidia crushes earnings, AI stocks could reignite their rally. Another one is lower than expected PCE inflation. This could fuel rate cut bets equals a stock market boost. And consumer confidence remains strong equals spending stays resilient. Now the bearish risks here, if Nvidia disappoints, expect tech, especially QQQ, to drop hard. Higher PCE inflation, Fed is going to stay hawkish, which equals market struggles. And then finally, weak GDP growth. Recession fears back on the table, baby. Now, the final thought here, the biggest risk, a hot PCE report plus a weak Nvidia earnings could send the markets lower. But if inflation cools and Nvidia delivers, we could see another leg higher in stocks. This is a must-watch week, so be ready for some volatility. All right, traders, we're back and we're going over Investor Central Club. Again, this is that segment sponsored by them as they are #1 options flow providers. So let's talk about what we saw last week. The options market was on fire last week with big money making some serious moves into inflation data, Nvidia earnings, and broader market uncertainty. We're seeing SPY puts dominate, Nvidia's AI momentum continuing, and QQQ getting defensive. Institutions aren't playing around, people. And if you're not tracking this, you're already a step behind. But don't worry, we're going to go ahead and break it down for you because you're lazy. So, first things first, let's start with SPY. We saw a massive 183.5 million in total flow last week. But here's the thing, folks. It was heavily skewed, and I mean heavily skewed towards puts. Total puts was at 144.15 million, but calls were lagging at 39.4 million. The most common contract here were the 600 puts expiring in March. These were traded 19 times last week. The translation here, institutional traders are either hedging against a pullback or betting on short-term downside. SPY's been flirting with all-time highs, and now big money is preparing for volatility. With inflation data coming out this week, we could see a sharp reaction if numbers come in hot. Keep an eye on that $600 to $605 range because that's where the heaviest options positioning is starting to happen. Next, we have Nvidia, who had 137 million in flow. Calls and puts were dead even. We had 68 million on both sides, which is crazy, and it's rare. It's like the opposite of FSLR that one day when they had literally 9 million in puts and like $683 in calls. The most common contract here are the 380 calls expiring in February. These had a hit of 23 times, and institutions are playing both sides. So most likely these are just hedges against each other. Bulls are betting on AI-driven rallies. Bears are expecting a pullback after that earnings call. Bank of America noted that the Nvidia's new AI chip, the GB300 and Rubin, and robotics expansion could drive the next leg up here. Now, what does this mean? If Nvidia smashes earnings, expect a gamma squeeze to push the stock higher. If guidance disappoints, those puts could pay off big time, big tings. 1,000%ers we're talking some big moves if they don't come through on guidance, because if it's anything we've learned, class, guidance kills most earnings reports. Now, no matter what, Nvidia is going to be major volatility and a major driver for this week. So go ahead and get your seatbelts on and buckle up, kiddos, because it's going to be a bumpy ride. Now, tech stocks had a rough week, and QQQ saw 95 million in total flow, with 66 million of that flow being in puts. The most common contract here were the 535 puts expiring in March. This suggests that institutions are hedging ahead of potential weakness in big tech. Do they know something we don't? Do they know something we don't? Maybe. With Salesforce, Home Depot, and Lowe's reporting earnings this week, we could see more chop in QQQ. So what's the game plan? If QQQ can hold above 535, it could signal institutional buyers starting to step in. If we break lower, expect more downside as funds rotate out of tech and into other sectors, which we will follow the money and see where that money is going to, brother. I promise you that. Now, two notables we have are Tesla and IWM in the flow. We had Tesla with 58.6 million in flow and a surprising bullish push with 38.7 million in calls versus the 19 million in puts. Traders are betting on a bounce, but competition is heating up in China. Now, IWM had 43.2 million in flow, and this was heavily weighted towards the put side with 35.5 million in puts versus the 7.7 million in calls. Small caps are getting hit like an opponent in a Mike Tyson fight, but this is probably due to recession fears. Now, finally, let's talk about some of our dark pool. Let me go ahead and pull up our dark pool here. Dark pool, quantity. No, I need total preems. There we go. There we go. So, major dark pool trades. We had SPY with 30 million blocks at 609 in the 595 levels, as we can see right here. Likely institutions are either accumulating or distributing. PLTR, we had some $30 million trades that we can see down here. Some serious money moved into Palantir as well. And then with IWM, we had 30 million in trades at $217.80. And this is confirming the bearish sentiment in small caps currently. By the way, Printing Tendy said IWM is a shit stock, so stop buying it. So that is also some bearish sentiment for you as well. These levels could act as support or resistance, though, depending on how the market is going to react this week. Now, what is our final takeaway here, folks? That's probably your big question. SPY's heavy put volume suggests institutions are hedging ahead of inflation data. Nvidia's 50-50 flow means expect big swings in both directions post-earnings. QQQ's bearish flow hints at a tech sector rotation. Tesla bulls are stepping in, but IWM weakness signals broader market risk. And dark pool levels to watch this week, we're going to watch SPY at the 595 to 609 level. PLTR at, where did they make those buys at for PLTR? At the $112 level. And then we also have IWM at the 217.80 level as well. So if SPY holds above 600, the bulls stay in control. If we see a break below, expect a sharp pullback to the downside and watch Nvidia's earnings. That could be the biggest mover of the week. And that is your weekly outlook report, folks. We did it. You made it to the end of the video. Go ahead and pour yourself a drink and make a trading strategy so you don't burn out your whole portfolio. And make sure to hit that like, subscribe, and turn on those bell notifications so you don't miss next week's flow insights and market analysis on the daily. Let me know in the comments, are you bullish or are you bearish heading into PCE this week? Go ahead and follow me on Twitter if you want real-time updates, and I will see you guys in the next episode. I love you all. Let's have a strong trading week, and you're all sexy.